Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video on the gold trade from this morning. We'll look at a couple of other instruments as well in terms of how they traded. Just a brief discussion about coming back to the simple, basic process. Again, we had major red news at 9:45 a.m. New York time, so there's a possibility that there could be a first-hour trade if it presents for me and any instrument, particularly when it's 9:45. That leaves plenty of time for a person to take an opportunity if it presents and still be out of the market and well in time to trade after the news or to not trade at all. But today, as yesterday being a holiday, President's Day in the United States, no U.S. session, no U.S. markets were open. And in Canada also, it was a holiday, family day. So no trading for me yesterday. And coming to the screen today, we talked about last week, especially on gold, gave us our day one. That was the peak formation, failed breakout at the low of the week, the month, and the year so far. And that gave us our day one day count. And I talked about this yesterday and also in previous videos, the significance of a 3-day U.S. holiday, in that sometimes we can have a major move or a narrow range day for inside bar false breaks or inside day trend trades sometimes can eventuate depending on the nature of the setup, etc. So today was day 3. And day 3, coming back to a couple of things. When we start a new week, I want to know, number one, have I broken any daily or weekly levels? Particularly weekly, because that can give me a thesis on a potential failed breakout and a new day count if we've had a breakout of a weekly high or low. Or if we are inside, and if we are inside, is there a potential setup for a reversal or a continuation trade? Now, we had a failed breakout on Friday. Then we had a market that broke out of Friday's high, still inside of the weekly high and low. So our previous week's high was up above last Tuesday's high. And coming into today's session, we had a market that had broken down in Asia, continued to break lower and extend that range. So we have an opening range breakout. Asia set the initial high and low. And then London proceeded to put in a low of the day, which it traded back down into just prior to our U.S. session beginning. Now, there were some traders that went long off the low of the day for a nice 100 pip move back up to the high of the day. This market gave a nice clean reversal for a first hour long trade back up to the high of day prior to our U.S. session news. Now, my thesis was that we would get a pump up and a dump opportunity, but because the news was late, this market I initially had a level at 75. I had the lower high of the London session in place. But the most important thing is time, the time of day. So I know several traders who did take this trade, who also, the short trade, and who also were tracking that and saw the entry but just could not pull the trigger. So we're going to talk about that. So again, the front side of this move is the long pump and dump. Now the market came up 3 levels, 50, 75, and almost to double zeros. It broke out and made higher highs and went into consolidation and continued the long trade right at the end of the very first hour. So traders who were long at the beginning of this move or who re-entered in at the beginning of the second hour were able to get 50 pips prior to the U.S. major news. The market opened up the second hour, continued to auction higher, another 3 levels of rise. Now, when the New York market opened right at this bull candle, bear bull combination, it took traders back to the high of the day. This is the first clue to be paying attention to, because when the New York equity market opens, it takes traders into the extreme. So this is, again, an opportunity to recognize two things. When the market opened, we went vertical to the extreme, taking traders further away. This last little bull candle is a clue right near the end of the first 30 minutes, just prior to the New York Open. That bull candle is the beginning of the pump on the last level headed into the New York Open. So again, we talk about the pump and dump. This ramped up volume is another giveaway that they're going to be coming back down. As they get closer to the high, that market starts to accelerate into the high, cutting off the bodies but not the wicks. So New York market opens, we pump it up another 25 pips past the 00 box before engulfing the high bull candle. That can be now a major level of resistance, major bull, high bull, major resistance. The market then pumps up just prior to the news and breaks down. This collapsing engulfment candle is a first bar entry into the market. Now this pin is a snowplow that clears out all the higher level longs in one pin. This is an entry. This entry locks in that whole high area, trapping volume in the upper quarter above the 00s. Now we talked about this candle being the pump candle. You notice they pinned through that candle before pulling back right away. They clear out that whole upper deck. Nobody's left up there that's long. That entry still controllable in terms of keeping our risk to that 20-25 pip range. But this is a momentum trade now. This is where they lift the offer and then pull the bids, and the floor should fall out aggressively and quickly. You'll notice that the next candle, 1 minute candle, completely clears out everything above the quarter level. So when you see these large lifting candles on the way up, get very suspicious. What that means is, as you see here, in 2 minutes, they lock in that whole upper 50 pips of volume that started at the beginning of the second hour. That's a whole hour of volume trapped. Now the initial first hour put a low of day or low of session in place. That becomes a potential area of where this market can fail. And again, coming back to our major round numbers, they extended the range 25 pips above the 00s. We'll just highlight this for traders. Locking in that quarter extension above the 00 box for a collapse down in one push, two push, and a third push down into major round numbers at 50. That auctioning process of 3 pushes is an automatic reason to exit this trade. If the market had just collapsed through and pulled back up into it, it would be a potential for a measured move down. This 3 pushes into the low is a dead giveaway as we head in towards the end of that second hour. So if you understand again the importance of paying attention to the clock, this whole thing, traders are looking at, they're getting in early, they're getting in, getting stopped out, or they're not sure where to get in. It's about the clock. There was major red news at 9:45 New York time, 9:45 a.m. There's nothing I can do until 9:45 a.m. They locked in the high. They break down and engulf on the first bar. Now, this is not in the playbook, but the reason why it's not in the playbook is that because traders would start taking the first bar on every single major red news announcement and be getting smashed on all kinds of announcements and then wondering why it's not working. So, as I mentioned, the first bounce trade is a very, very specific opportunity that, for the most part, 99%, if you follow the rules of that trade setup, protects you. The whole purpose of that trade setup is an explosive move that allows you a second re-entry into a momentum trade. This market has already gone up 125 pips. From the low of the day, it has gone up almost 150 pips. 3 levels of rise. Broken down and on the news candle engulfed the entire upper structure. So understand this candle, once it prints, now New York is already open. The news has been released. This is a momentum trade back through the higher level longs of the first hour back to where that initial breakout started after they put in the low of the session. They pump it, They pump it on the last leg. Remember this bullpen hammer into the last 15 minutes into the New York Open. It breaks down. They pump it up one more time. The news is released and goes vertical through all the higher level longs in that 75 pip box. So again, some traders were on the front side of this move. No problem at all. They're long. They got a nice 50 to 75 pips. The short trade locked in 65 pips pretty fast in 8-9 minutes. And it was a zero stress, very low heat trade opportunity. So coming back to levels, a couple of good questions. Where would you size in? This opportunity is literally everything above double zeros once they've locked in the high. And that news is released. I am getting in as much as I can prior to it going through the zeros, because this should go fast and I want to be filled above the zeros if my target is in that 50, 45 area of that lower first hour opportunity. It's either a pump and a dump or a dump and a pump. They pumped it up into that second hour. New York opens, takes traders back to the high of the day before, and locking it in, pumping it up one more time. The news is released. Bang, they pin through higher level longs, pull it back, and then collapse down through into the first hour longs. Several traders were interested in taking the spot crude trade, and I had levels at the high of the gap time in London and the low of the London session. So essentially we were in a 100 pip box. Again, you'll notice the importance of the 100 pip increments. We are inside of a 100 pip box. I'll just mark this off. And again, the same thesis applies that we just saw on gold. This is a 5-minute chart. We'll look at 5-minute and the 1 minute, but we had a lower high on the 5-minute chart in the gap time, just above the 100 pip box. The market traded inside 50 and double zeros prior to the New York market, equity markets opening. And again, you'll notice the pin hammer at 9:30 New York time. I'll just highlight that for traders. The pin hammer after the New York Open takes traders back up to that lower high, pinning up to the quarter level at 25. But the same thesis applies. We have a market that has pumped up from 50 to 75, 75 double zeros up to 25 before breaking down and pumping back up. We have a break in structure. The market makes lower lows and lower highs into the very end of the second hour. The same process applies. In a broken down market, I mark off the high bull as potential major resistance. The third hour opens. So again, I talk about levels. I need to get filled above 75. Once this market breaks down, I will get in anywhere above 75, as close to that peak formation underneath as I can. So instead of staring at each little candle, remember, as soon as this hour ends and they pump it up, I will get filled anywhere in here. My max stop will be placed at or near that peak, and I will try to keep that to a maximum of 25 pips. If the market confirms and breaks down, I will add into that. I will add into that trade all the way through into that peak formation low from the pump and dump on the way down. Once it breaks or goes into that low of that candle, this market now potentially is at an area where it can fail. But if it eventuates, the trade can still produce potentially a measured move of at least 1 times full expansion of that 50 plus pip box, which should take us down to the bottom of the double zero. So again, the same process applies. We have front side, it's a pump, a break in structure. They pump it back up into that upper level. Timing window kicks in. That new hour pumps up one more time. Allows us to get filled above the quarter level in the upper part of the 100 pip box. Managing our risk, we're on the back side of the move for a potential measured move down of this 50 pip box. False break of the 100 pip box that took out the lower high. Break in structure, pump, for the dump and the collapse down to the bottom of the 00 box. Pound Aussie earlier in the day on GBP, a British flash manufacturing, gave it a fantastic first bounce trade right at the end of the 15-minute candle. So this particular entry was the first minute of the new 15-minute candle after major red news during the London session, and that trade gave traders a nice 50-plus pip move, continuing an explosive momentum trade. Now, again, coming back to the understanding that that was facilitated by a 15-minute setup. So we have a market that is broken down on the holiday, triggered the low of the day. So remember, they triggered the low of the day. What does that tell us? That tells us that if this breakout has failed and they are going to target stops or where the money is on the other side, first stopping point is the previous day's high of day or the current high of day. That market broke out on the close of that 15-minute candle. Our first bounce opportunity allowed us to participate in an explosive continuation momentum trade that was facilitated on a news catalyst, which was the GBP flash manufacturing. So again, understanding that we had a 15-minute setup, we had a daily setup, and that was facilitated, that we were prevented from getting into that until after the news. The first bounce gave us an explosive opportunity, and when we have this type of setup, that is a perfect recipe for a measured move of 100% expansion of that range that it has broken out of. Go read Classical Charting, Peter Brandt, Schabacker, Edwards McGee. This is a large rectangle. We had an explosive breakout on the 15-minute candle, and the first bounce gave us a textbook perfect entry opportunity for this trade. Just lastly, I want to talk about a trade setup that some traders took today on the Euro New Zealand. I do not often trade this pair because the spreads for me widen out too much to 3, 4, sometimes 5 pips. And obviously this was a fantastic 3-day setup. We had a 3-session setup. We had London high of the day. The US put in the low of the day. Asia traded down to the low of the day before engulfing and reversing, going into consolidation, and then the Europe window going vertical back into that high and breaking structure on the inside, pumping up to the high of the week, day 1, day 2, lower lows, lower highs, breaking structure, the recipe for the pump and dump back down to the low of where that move began. Universal 5-minute criteria got traders in at or just below 50 for an easy, low stress 75 pip collapse, which is the type of trade opportunities that I love to look for. So again, I did not take this, but some traders messaged me and that you gain 1 push, 2 push break in structure, 1, 2, and the engulfment 3 for the collapse for an easy, low stress 75 pips on a day 3. 3-session, 3 levels of rise, pump and dump. So congratulations to traders who took this trade. For traders who took this on the shorter time frame, same process applies. We had our high bull engulfment for major resistance. We had the second 30-minute cycle start. So we're into the third 15-minute candle. We've already broken down and engulfed. The next most important thing is to be getting filled above the numbers. So anywhere below the peak formation, high bull major resistance, we've already broken structure on the inside, and they've pumped it back up into that third level for a measured move opportunity. Again, front side, back side. We've gone 3 pushes and gone sideways before breaking down and pumping back up. We're now on the back side of this move. Again, for an easy 50 to 75 pips, depending on where traders got filled. And these are the types of opportunities we want to hunt out. So if you didn't take any of these trades, it doesn't matter. There's going to be plenty more. And there's going to be trades that occurred on other instruments. But look for the easy trade setups. Pump and dump, dump and pump. Day 1, day 2, day 3. So just because we're on a day 3, it needs to set up. And this is an easy, low stress opportunity that's set up perfectly for traders over 3 days, Friday, Monday, Tuesday, yesterday being a major U.S. holiday. But again, boom, 3 levels of rise right into the open. They pull it down and break structure. They pump it up one more time and engulf and collapse for an easy, low-stress trade. Lock in the money and get off the screen. Hopefully that helps traders. Again, I've been traveling quite a bit on the weekends with my children's sport. I've been away trying to squeeze and juggle a few things, and been, excellent opportunities. It's going to continue. Today, I just still fundamentally need to reinforce, keep it so simple that you just need to wait until you need to go over and into the corner, like Jim Rogers says, bend over, pick up the money, and then leave the room. Don't keep trading. Don't try to get more pips. Don't give anything back. Learn how to scale these rinse and repeat opportunities up in size. Look for the easy trades, the easy, no stress trades. We're going to get some more best trade setups. We have the Fed coming on tomorrow. There may be some opportunities before that even eventuates, but keep it simple. Make trading a pursuit of pleasure and not misery. Have a great day. Keep it going and keep it growing. And may the markets go with you.